Good morning, everyone. In today's session, we are going to look at the assignment feedback for the current year. And the reason we are looking at it today is to make sure that the mistakes that most students have made is highlighted to ensure that when you guys get to the test, you don't make similar mistakes and lose the marks. Okay, so what we're going to do is I'm going to go through each question and then we will look at what was the proposed solution. So this was your question paper that you had to do for the assignment. So for question 1, they ask you, there are various users of accounting information. Identify 3 of them. So you had to identify any 3 and explain how they benefit from the accounting information. Okay, so we had to explain how they benefited from the accounting information. So your answers could have been a customer, a supplier, or any other creditors. It could have been government and their agencies. It could have been general public, management. It could have been investors. So there were a whole long list of items. So let's quickly look at who were the main users of the information. So your main users, and this you can find on page 4 to 5 in your textbooks, was your investors, employees, labor unions, lenders, suppliers and other trade creditors, your customers, your government agency and the agencies, general public and management. Then what you were required to do for additional points, so you got a point for listing one of the users, and then you got 2 points for your explanation for what each one, why they would actually use this information. So on page 4 and 5, they explain exactly what was the user's intent, why do they use this information. So based on your explanation, most of you gave me very good explanations and then you received the point, whereas others try to reword it, but in that process of rewording it, your sentences just no longer made sense, or you use terminology that is more American terminology and means something completely different in a South African context. So then you lost the marks. Okay, let's look at question 1.2 and see what you had to do there. So question 1.2, accounting plays an important role by providing answers to questions faced by the users of accounting. They ask you list 3 questions to which accounting information provides answers. So they tell you it's the users of accounting information. So let's quickly look at what type of questions you would have to ask in order to have received the marks. So the type of questions that is listed on page 5 is how good or bad is the financial condition of your business? Has the business activity resulted in a profit or loss? How well have the different departments of the business performed in the past? Which activities or products have been profitable? Which products should be discontinued or which products should be increased? Should a company produce its own goods or buy? Is the cost of production reasonable or excessive? What has been the impact of existing policies on the profitability of the business? What impact will new policies have on future earning capacity? Reflecting on past performance, how should the business plan in the future endeavors to ensure favorable results? So these were the type of questions you had to list. Any 3 of those would have given you the marks for this question. Then question 1.3, they tell you in your own words, discuss the 4 functions of management. So the 4 functions of management is planning, organizing, leading, and controlling. And then you had to discuss what each of these 4 units are. So let's quickly look what information you had to provide. So you had to first list each of the 4 roles of management. So it was the planning, organizing, leading, and controlling. For planning, you had to say identifying ways of attaining goals and the resources needed in the process of reaching these goals. So the first thing is to identify ways to achieve your goals and what resource do you actually need for that. Then organizing was to develop a framework or organizational structure and putting measures in place to ensure that the resources, the people, and the material are in place to reach the goal. So for organizing, you're putting processes in place to ensure that the people and the materials that you need to reach your goals are where they need to be, when they need to be there. Leading is directing the human resources of the organization and motivating employees in such a way that their actions are in line with previously formulated goals and plans. Okay, and then the last one was controlling. Check that the performance and actions conform to plans to reach the predetermined goals. Control makes it possible for management to identify any deviations from these plans, rectifying these deviations, and if needed, revise the goals and plan. So basically, controlling is making sure that what is supposed to happen happens, and if there's anything that went astray or went is different to what we anticipated, how do we then revise our goals and plans in order to still achieve what we wanted to? Okay, so question 1 was actually answered fairly well. Most students got between 80 to 100% for this question. Question 2, on the other hand, did not go as well, even though it was not as difficult. So a lot of students need to go back to Learning Unit 2 prior to the test and make sure that you understand what is going on. So what happened in this one is a lot of students did not capture the debit or the credit in this balance, or they mixed them up, and then they did not know under which account the information would be. Okay, so the first one is advertising. Because of an expense, we would debit the account. Okay, and I just said it's an expense, so the account would have been the expense. Creditors control is a current liability. Okay, so normally we pay it back in 30 or 60 days. Creditors, exactly like it says, we will credit the balance. Okay, interest on savings is an income account, so we will also credit income account. A lot of students thought interest on savings is a current asset or is a bank account. If it was a bank account, it would have just said savings account. So interest on savings is income. Capital, please remember, we credit capital, we do not debit it. We debit drawings when we look at owner's equity. Okay, so we credit capital, and capital is a proprietary account. Then furniture, we debit furniture, and furniture is a non-current asset. Most people thought furniture could be a current asset, or they confused it and said it's a non-current liability or an expense. And then cash float is a current asset, so that's money we have access to now, and that is also a debit balance. And mortgage loan is a credit balance, it's a liability, and it is a non-current liability because we normally will pay it back after 12 months. Okay, so that is what you had to do for question 2.1. That is how you would have had to complete the table. Then question 2.2. What they required here from you is to calculate Jacob's equity, showing the effect of all transactions on the accounting equation. Now, what is very important here is that you have to show the effect on the accounting equation. It was easiest to do this in a table format in order to ensure that you do both the debit and the credit entry in your accounting equation. Those people that did not do it in a credit format only did one side of the entry and did not balance the accounting equation. So let's go through the information that was provided. They tell you Jacob Nokon Kono had the following funds available in the business. So they had 100 Rand in the business account. Okay, so in the bank account, so this would be an asset, of which 50,000 was from personal funds and 50,000 was from a bank loan. Okay, so they tell you that 100,000 is made up, 50,000 is personal funds, which would have been owner's equity. And the other one is from a bank loan, which is liabilities. This means assets is 100,000 equals owner's equity of 50,000 plus liabilities of 50,000. So this would have been your opening balances. Because they want you to give you the closing balance of equity at the end of the month, you would have started off with your opening balances and then adjusted for any movement during the month. Okay, the next one is we purchase merchandise via EFT. Okay, so here they tell you we do the perpetual inventory system. So we know perpetual inventory system, we take it to assets, our inventory account. Okay, so merchandise is inventory. Okay, when you have to give the account name, you would use the account inventory and not merchandise. Merchandise can also be viewed as an expense when you get to second year, so that's why inventory is your asset account. Okay, of 20,000. Now that would mean if we take the accounting equation, we purchase merchandise of 20,000. So we purchased 20,000 Rand of inventory. Okay, so I'm just going to make here inventory. But we paid via EFT. So we paid it out of our bank account. So that means owner's equity is 0 and liabilities is also 0. That's how you would have balanced that second one. Then the third one, we have purchased computer equipment on credit. Okay, so it's very important, on credit for 15,000. So we bought computer equipment, which is an asset. I'm just going to make computer equipment. Okay. And then we paid for it on credit. So we haven't physically paid for it as yet. So we have liability will increase with 15,000 Rand. Then we withdrew 3,000 cash from our petty cash. Okay, so this means our petty cash would be asset account. So we decreased our asset account with 3,000 Rand from our bank. And we placed that 3,000 Rand in petty cash, which is also an asset. And then the owner's equity and the liabilities are 0 again. Then for the last one, we paid off a bank loan. So that means we paid the loan. So our bank will decrease with 5,000. And our liability, our loan, will also decrease with 5,000 because of the fact that we paid it off. Okay, now if you only did the equation and you did not do all of these, you would have lost some of the marks. So you can see that's where the columns would have been easier. So let's quickly look at what the columns would look like, so I can just show you the last step. So the first step would have been you would have added the opening balances. Okay, then you would have done the entries as I've discussed now, and you would have populated them. And then the last step would have been to get to the total to work out what is the owner's equity at the end of the year. Okay, doing the accounting equation. So this is why a table format was better, because of the fact that you know you have the debit and the credit entry if it goes through the same asset category. If you only use the formula, then you had to add in both of these amounts on the asset side in order to get the marks. If you only did the one, you would only receive one of the marks. Okay, before we move on from question 2.2, do you guys have any questions? So Liwei, do you have any questions on question 2.2? Okay, then I'm going to go on with question 3. Okay, question 3 was again a theoretical question where they ask you theory regarding VAT, markups, and source documents. So the first question asked us, explain what is meant by the term VAT. So you have to explain what is VAT, and then provide a short explanation on how the VAT system works. Okay, so most students got this right. So what you had to do for the marks, let's quickly look at the suggested solutions, is you would have had to say, so what is VAT? VAT is a tax that is levied on almost all goods and services provided. The reason we say on almost all goods and services provided is because some of it is exempt, which means there's no VAT on it, and then some of it is zero rated, which means VAT is levied at 0%. Then what SARS allows us is we can claim back a portion of the VAT on the invoices we receive if we are a registered VAT vendor. And that VAT that we can claim back is called input VAT. And it is an asset in our business, so SARS owes us that money. Then as a VAT vendor, we must also charge output VAT on the selling prices of our goods and services. And that output VAT is due to SARS and is regarded as a liability by the business. Now it's very important, output VAT is due to SARS. It's not SARS that has to collect the output from us or source it from us. No, we have to pay it over to SARS. And that is the VAT that we've collected from our customers on behalf of SARS. So we are liable to pay it over to SARS. Okay, question 3.2. Okay, question 3.2, the business sells. Okay, complete the following table by providing the missing information. Okay, so now you had to complete the following table and you had to include the following missing information. Now, your possible source documents, you did not lose a mark if you did not say duplicate or original. As long as you had the document in there, you would have received the mark. So the business sells goods or services for cash. So when they sell something for cash, the documents we could receive is a duplicate, or the document we have is a duplicate cash invoice, because the original would have gone with the customer, or a cash slip. Cash slip or cash register roll. Okay. Depending on how your business works, you either have a cash slip or a cash register roll, depending on whether it's more high-tech or whether it's old school. Then the next one, a duplicate tax invoice with payment terms was issued. Okay, so this means the business is selling goods and services on credit. So it is basically this on credit. Let me just make it a different color so that you can see which ones are what I've added. Okay, the customer of the business sold to you on credit, returned goods or rebates after the sale. Okay, so this is, you sold it, you purchased it on, they sold it on credit and then they returned some of the goods. So what would we issue? We would issue a duplicate credit note, would have been our supporting documents in the business. Okay, petty cash voucher and original cash slip from supplier. So what would that be? That would be the business pays for goods or services from petty cash. Okay, because we've got a petty cash voucher, it would have been from petty cash. If you did not mention petty cash, you would have lost the mark here. And then the last one is received money from a debtor for part or full payment. So what would we issue to them? We would issue a duplicate cash receipt to that debtor if they pay us. Okay, and that is what you had to fill into this table. Now this table, a lot of students struggled with. This one was not answered as well. A lot of students did not know the different types of source documents, and the part where most students struggled was this part here on the left-hand side. Okay, so leeway, was it necessary to say it's a duplicate like you did not say duplicate, you did not get a mark? So they said if you did not say duplicate or original, we did not penalize you. As long as you had credit notes or cash invoice or cash slip, you still would have received the mark. Okay, so it was not a requirement to put in the duplicate or the original. As long as you got the correct source document, you would have received the mark. So anyway, does that answer your question? Okay, excellent. So let's move on to question 3.3. So they ask you to explain when is a full tax invoice and a bridge tax invoice required. Okay, let's go look at what you had to write down for that. Okay, so for that you had to write a full tax invoice is required when a supply total exceeds 5,000 Rand. Okay. If a supply is less than 50 Rand, a tax invoice is not required. However, another source document, such as a cash register slip, is required to verify the amount. If the supply is greater than 50 Rand, but does not exceed 5,000, then a bridge tax invoice is acceptable. So this one was capped at 4 marks. There were more than 4 marks available. So depending on what you wrote, you could have got more marks than what was the maximum allowed, but we capped it at 4. Okay, then question 3.4. Let's quickly just see what question 3.4 was before we look at the answer. If a customer buys goods amounting to 3,000 Rand. So we bought goods and it's 3,000 Rand. It uses only traditional cash registers, so you get a cash slip. Would it be an appropriate source document? And what would distinguish this document from a full tax invoice? So what you had to do is the previous information, you would have said, yes, this is an appropriate source document as it is less than 5,000 Rand. It would, a bridge tax invoice would be applicable. And what distinguishes it from a full tax invoice is that the buyer's information, their VAT number, their address, and their name would not be on the document. So let's quickly see. So yeah, a cash slip would be regarded as a bridge tax invoice and would therefore be appropriate. It is less than 5,000 Rand. On an abridged tax invoice, the following information would be left out when compared to a full tax invoice: the name of the buyer, the address of the buyer, and the VAT registration number of the buyer. Okay, so if you wrote something in that line, you would have received the marks for this question. There were also more marks available here, and it was also capped at 4 marks based on what you've written. Now, these two questions, in majority, it was actually answered relatively well, so I wasn't too worried about this. Question 3.5, this is where you had to do the markup percentages as well as the cost price and the profit and loss. So I'm going to create the Excel file quickly and then just unhide the amounts that were given to you. Okay, so this is what the table looked like initially, and you had to complete the fields. Now this, a lot of students got most of this correct. Where they went wrong was either here at the top and with the percentage specifically. Okay, so for the first one, on here they tell you it's a markup percentage on cost. Now what is very important is the fact that it's on cost. Okay, just gonna make this red so you can see this. So we said if something is on cost, that means the cost price would be 100%. Okay, our markup percentage is the same as what they've given to us, so our sales percentage would be 125. Now we know this represents 125. We want to know what is the cost price, so we want to convert it back to 100. So to get to the correct answer, you had to take the 1,000 multiplied by 100 divided by 125, and you got an answer of 800 Rand. Then the profit is the difference between the two, or alternatively, you could have said it is the profit is 25% over 125 would have also given you 200 Rand. Then for number 3, again, our markup is 100 because it's on cost. So on cost is 100. The markup percentage itself is 100, which means our sales percentage is 200. So that means you follow exactly the same process as you did for the first one, except it is 100 over 200 in this case, making the cost price and the profit exactly the same. Now the last one was a bit tricky. So your first step would have been to work out the cost price. Now the cost price is the difference between your selling price and your profit. So that is 1,000 Rand. And then your markup percentage is your profit over your cost because it's on cost. So we would have said 1,500 over 1,000 would have given us 150%. And that's how you got to the correct answer. So Liwe, do you have any questions on this? So Liwe, do you have any questions on the markup percentages? Okay, then we're going to move on to question 4. Okay. Then question 4. This question was not answered as well as it should have been. A lot of students struggled with this in the sense that they did not balance the amounts. They worked out the VAT incorrectly, so they used the incorrect fractions. And then for the cost markups, they did not read that it was on selling price, so they worked it out on cost price instead on the sales value. Okay, so let's quickly go through the information and then we will look at how to complete this specific question. Okay, so the first thing is Megabyte Traders is registered for VAT. Okay, as soon as you see it's registered for VAT, you know that you have to account for VAT. And it only trades with other registered VAT businesses. Now, we said that is important because if you do not trade with other registered VAT businesses, you cannot claim the input VAT on your invoices because they would not have raised output VAT on it. The business charges 15% VAT on all of its sales. Okay, so our VAT percentage is 15%, and all amounts are inclusive of VAT. So all amounts are inclusive of VAT unless the VAT is not applicable or stated otherwise. So everything is inclusive unless they tell you otherwise. We use the perpetual inventory system. So we said perpetual inventory system goes to assets and a markup on the inventory of 20% on sales. Now what was important here is that you note it's on sales. So that means our markup would have looked as follows. Our sales price would have been the 100. The markup percentage is 20, which means our cost price would then be 80, which is the 100 less the 20. Okay, and it's not 100 over 120, it's 80 over 100 would give you the correct cost of sales. They do not expect to award any settlement discounts, nor does it expect to qualify for any settlement discounts. All settlement discounts are therefore deemed to be incidental in nature. Okay, so let's start with the first transaction. The first transaction, it says a cash sale. So cash sales, okay, of inventory for the day amounted to 23,580. Okay, let's quickly see what is required from us before we continue. Record the transactions given above in the following journals. So we have to record it in the following journals. Okay. No document numbers are required for the journals, and the journals need not be total. So we don't have to give a document number, and we do not have to total it. Okay, so and round to 2 decimal places. So let's quickly see which journals. The first one is the cash book receipts. Cash is banked on the day of receipt. Okay, and then the columns we needed was debtors control sales and output VAT. And petty cash was stationery, input VAT, and staff entertainment. Okay, so we had to do a cash book receipt and a petty cash one. Okay, so the first one, cash sales. This would go to your cash book receipt. Okay, because it's cash sales, this would go onto our register, cash book register roll, so our analysis of receipt column will also have an amount. Okay, so let's do the first entry. So the first entry was on the 3rd, it is cash sales. Okay, the analysis of receipt would have the 23,550, and they say we banked it on the same day. So we would have banked it as well. Now remember, for cash sales, we need to account for the VAT. So I have indicated here what the VAT calculation is at the top. So you take this amount, you multiply it with 15 over 115, and you get a VAT amount of 3,075 Rand and 65 cents. And your sales value would be the difference between the two. Okay? So that is the first entry. But remember, we still have to do the cost of sales. So in our perpetual inventory system, if we sell something, we account for the cost of sales on the same day. Now we said our cost price was 80 and our sales price is 100. So you take the sales value, you multiply it with 80 over 100, and you get a cost of sales value of 16,403 Rand and 48 cents. Okay, we use 500 from the petty cash to pay for fuel from total. Okay, so 500 from petty cash for fuel from total. So that would go to our petty cash journal. Okay, so in our petty cash journal, the date here was the 5th. So you could have either said fuel/total, where you purchased it, and then you could have said 500 Rand. Now remember, fuel is 0 rated, so we do not have any input VAT. So we would have 500 here for fuel, and the account name would be fuel. Then on the 15th, received the monthly rental income of 20,520 Rand for the office building of the lessee TU Bath, and it was a direct deposit into the bank account. Now remember, if it's a direct deposit, it will not hit the analysis of receipt account at all. So that means for this, your analysis of receipt, so first information 15 TU Bath, analysis of receipt would be 0. And our bank would be 20,520. Okay, now we have to take out the VAT that we have to raise on it, which is the 15%, but the remaining portion will go under sundries to rental income because we do not have a column for that. Then on the 17th, we've bought coffee and tea from Spar for 150 Rand and paid for it using petty cash. So this would go to petty cash again. Okay, so let's look at petty cash. Remember, staff entertainment do not have any VAT, so coffee and tea / bar, 150 Rand, and 150 Rand to staff entertainment. And then on the 25th, Empalea Debtor made a direct deposit of 103,000 in full settlement of 112,576. Now remember, they only asked you for the cash book receipts. They did not ask you for the general journal. So we're only going to account for the portion they paid. So in this scenario, because it's a direct deposit, our analysis of receipts again would be 0 and our debtors control would be 103,000. Okay, we do not account for that because this is physical money that came in to settle an outstanding amount. Then on the 26th, we bought printing paper from a local office supplier and we paid petty cash 150 Rand. Now printing paper, we can claim input VAT. This is also petty cash journal. Hold on, let me just put in here cash book. It's a petty cash journal. Okay, so let's go back to the petty cash journal. So the information you would have captured there is as follows. So printing paper or local office supplier, 180 Rand. The VAT would have been 23 Rand and 48 cents. So it is the 180 times 15 over 115, and the printing and stationery would have been the VAT exclusive amount. So that would have been the 180 times 100 over 115. And then on the 28th, we had a cash sale of inventory for 70,965. The inventory was near expiry, so they sold it at a markup of 10% on the selling price. Okay, so the cash was banked on the same day. Okay, yeah, they've actually changed the markup percentage, which a lot of students miss. So yeah, your cost price would have been 90, your markup would have been 10, your sales price would have been 100 instead of the 80 we had originally. Okay, so how do we account for this in our cash book receipts? We would have accounted for it as follows. We would have put in the analysis of receipt the 70,965 Rand. We would have included the same amount in bank. Then our output VAT would have been that amount times 15 over 115, which gives us 9,256 Rand and 30 cents. And then the sales amount would have been 61,708 Rand and 70 cents. And then the cost of sales, sorry, this would be 61,708,70 times 90% would give you the 55,537 and 83 cents. Okay. And then the last transaction, we've received interest on a bank balance from ABC. Now, when we receive interest from a bank, it is directly deposited into our bank accounts. It does not go through our analysis of receipts. So you would have entered it as follows. So your analysis of receipt would have been 0. You would have received an amount for 342 and then 342 for interest received. Now, where a lot of students lost marks is here because they did not indicate whether it went through the analysis receipts or not. And then the other thing is it did not balance here. So what needs to happen is your main column, your bank column, needs to equal whatever is in the other columns. So if we've got 23,580 here and I add the 3,575 and the 20,504 together, that should equal to the 23,580. Then I know I've balanced my columns. The cost of sales column, you do not add that, that is separate on its own. So a lot of students did not balance their journals correctly, so I would advise that those that did not balance it correctly to go back to Learning Unit 4 as well as Learning Unit 3. So Learning Unit 3 more for the VAT principles and Learning Unit 4 for how to complete these journals correctly. Okay, do you have any questions on the assignment, or is there anything that I need to clarify? Siliwe, do you have any questions on the assignment, or is there anything that you want me to re-explain regarding Learning Unit 1 to 4?